All right, guys, back to work here tonight. Weekend's over. That's all right, though. Got some big trades coming this week here. Brand new week, brand new month, brand new quarter, and boy, oh boy, we have a lot of great trades setting up for Tuesday. It's Monday night. We're getting ready for Tuesday's trading session. I have a lot to cover in tonight's video. We're going to cover all my favorite trades tonight. Then we get a game plan to make some money tomorrow. We have a lot to cover before we jump in and get this party going tonight. Make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, if you guys enjoyed this video, do me a favor, hit that like button. I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Tuesday. Tuesday is not going to trade itself. Like I said, a lot of good trades setting up here for tomorrow. We get some really nice strong moves there. NASDAQ is nice and strong. S&P nice and strong. Bit ranging here on the crude oil. NASDAQ and the S&P are nothing but bullish right now. We have some strong moves higher here for the buyers. So we obviously do want to be buying some pullbacks here. I have two different types of pullbacks I'm waiting for right now on the S&P and the NASDAQ. And obviously, you know, as we mentioned last week, we are still very much in a long-term bear trend right now. So you know what I'm going to say right now. This could easily be nothing more than one big bull trap, and this thing might be due for a reversal. Now, I'm going to definitely keep my eyes on some reversals. We've got some great potential reversal setups. I have three different ways to potentially short this market tomorrow, so we're going to cover those here tonight on the video. So buying pullbacks, shorting the reversal on the NASDAQ and the S&P. Oil is the funny one tonight. Oil is a little more difficult to pin down. We're definitely bullish in the wake of Hurricane Ian last week, and you can see there's a range, right? That range right in the middle. I'll tell you, there are really two primo locations on crude oil to be a buyer and really two great spots to be a seller. So range-bound market, buying low, selling high. There's a lot of good trades here across all three of these markets, and we're going to cover them all here tonight on this video. Now, before we jump in and talk about each of these charts and where the best money-making opportunities are for tomorrow, let's make sure we know when the big news is for tomorrow. Tomorrow is a Tuesday. There really is one big news event tomorrow. We get that JOLTS report coming in at 10 o'clock Eastern time. That is the big news of the day. We do have quite a bit of Fed speakers you can see tomorrow as well. I don't think the Fed speakers are going to have as much impact this week because we have that big non-farm payroll number. That number on Friday is the big news of the week, and it will definitely speak for itself. That will be a bad news is good news news event later on here this week. So I wouldn't get too obsessed about the Fed speakers tomorrow or the rest of the week. I don't think we'll get more Fed insanity until we get through the employment number coming on Friday. So JOLTS report coming at 10 o'clock Eastern time. If you could only be at your desk for an hour tomorrow, I would think that 10 o'clock to 11 o'clock block. And then we've got more big news. Got a big OPEC meeting. They're talking about production cuts at the OPEC meeting on Wednesday. Got a big ISM number. And then, of course, that jobless claims coming on Friday. But again, tomorrow, JOLTS, and JOLTS. And that'll be a good time to be in our trade room tomorrow morning with me. We open up at 8 o'clock Eastern time. We'll talk about the rest of the news. We come back tomorrow. Let's get back to our charts, though, because as I always say, right, the money's in the charts. The news is good to know when the potential catalysts are, but we use the charts to actually make the money right after those news events come out. Now, guys, whether you trade one of these markets or you trade all of them, make sure you watch all the way till the end of this video tonight because you'll learn something new throughout every part of this lesson. I'll provide different trade ideas, different strategy variations, and you know me, I try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. So take some notes, grab some screenshots, post some questions in the comment section if you got them. Let's go NASDAQ, let's go S&P, and let's go crude oil. Jumping in first to the NASDAQ or the micro NASDAQ or the QQQs. A lot of students right now making money on the triple Qs here. Now keep in mind, first of all, this is a tick chart. This is a 5,000 tick chart on the NASDAQ. You'll notice all the time frames are in the upper left-hand corner. And also be aware, too, everything I talk about on the NASDAQ can be applied to the S&P. The S&P can be applied to the NASDAQ. So just be aware they are very much interchangeable. And I'll do my best not to repeat myself here on these charts here tonight. There are four key insights that are telling us, you, me, where the best potential money-making opportunities here are for tomorrow. The first one is the bear bias. We know we have a long long-term bear bias right now. Look at a daily chart, look at a 4-hour chart, look at a 60-minute chart. We are very much still in a bear bias. Now, why is that important? Well, because this slow walk higher they made today could easily be nothing more than a great chance to be a seller back down again. So I definitely do want to keep some sell setups, some reversal trades on my radar because of that. We're going to cover those here tonight as we go deeper. The second one is probably the most important clue on this chart right now, and that is the strength of that move higher. Anytime we see a strong move in one direction, we expect to see what? A pullback into support levels below. We know buyers want to buy low. They're going to want to come in. They're going to buy this thing and get that retest of that high. Okay, so strong move for the bulls. They're going to want to buy that pullback, get that target off at that high. Now, once they take their profit at that high, then do we break out higher, right, for another leg higher? We'll talk about breakouts here on tonight. And sometimes they can't. Sometimes they fail, and we get either a trading range up here or we get a full-blown reversal, and that reversal will put us back down around that 11,000 big round number. Very similar, obviously, to on the S&P. So, again, most important kind of takeaway on this is that strong move higher, right? That tells me I can't exactly short this thing, even though we're very bearish overall. I want to anticipate that pullback, anticipate a retest, and then from there we'll know more about whether or not we can short this sucker here with some confidence. The third key insight here is a major top, right, or major resistance overhead. Now, this is not the most important part of this, right? You'll notice this is not in play on the S&P tonight. The S&P did a pretty good job at breaking through its key overhead resistance, but you will notice, right, we are at a major area of resistance, and you'll notice even more, there's a range right down below. Ranges act like magnets. And so we know that, again, there's a long-term bear bias. We're at major resistance. This will be a great place to be a seller. Again, we're pretty strong bullish right now, so it's difficult to want to short right now, but we'll talk about some shorts here in a moment. So that's a very important clue there. And then really what might be the second most important clue on this is this resistance trend line. You'll notice I've drawn a trend line down off that high. There's one on the S&P as well, by the way. Classic. Anytime we look for a pullback, because we know we get a strong move higher, we want to buy that pullback right now. But think about that trend line. Yeah, that trend line is, well, it could be your worst enemy or it could be your best friend. And we'll talk about how to use it to make some money here as we go a bit deeper into this video. So buyers have control. We want to buy a pullback right now. We got to be aware, though, that trend line's a bit of a pain in the butt, right? That trend line is kind of holding us up here a little bit. So here are two ways I want to buy this using that trend line. Now, again, that trend line coming down can be your worst enemy or it could be your best friend. Here's the first one. It's a very strong move higher. So we know that any pullback right now can be seen as a buying opportunity. I would love to get us down around this 1185, 1158 area. That would be my favorite area here. But I have no idea what's going to happen. I can only take what the market gives me. Now, let's say they give us a pullback. We got that prior swing, that makes for a great little buy zone right there. The problem with that buy zone is it's not a very deep pullback. And we don't have deep pullbacks. We have to be aware we're probably not going to have that many buyers that want to buy there. You know, buyers want to buy low. So whenever I see a strong move and I see potential to buy a shallow pullback, I have to be worried that there are not going to be a lot of buyers. And for me to get an edge over the bears off the highs right now, I'm going to have to trap in some of those bears, right? And what you want to do is you want to think about, this is a little more tricky of a pattern here, but follow along with me on this one. What you want to do is you want to think about that trend line coming down, okay? Try to use that trend line. The most important thing about this, though, is because we're not going to get a very deep pullback, we have to basically trap in the sellers and use their stop losses as fuel. And to do that, we'll use a trap setup. I'm looking for what's basically a 2-try failure off of that high. And we're going to look for a combination of two things here, okay? So pay attention. It needs to be a trap low, okay, below that prior swing. Not to worry, you'll learn all about trap setups in my free trading courses on my website. We'll talk about that a little bit later. So traps are critical whenever we are buying relatively high, okay? Because we have to get the bears trapped in and use their exits as fuel. The trend line here, again, can be your best friend if you use it as support. Okay, so this is a 2-try failure pattern. I know it's a bit complicated with a trap set up. And the most important thing is I want that trap, right? I want that trap because I'm buying relatively high. Now, if we get what I really hope, right, we go lower here. If we go lower here now, right, get that nice deep pullback into that zone now our job is a lot easier now. Now we have to get these bears to come in. And ultimately now we're hoping we're going to get some bears coming in here and basically get short off that moving average. At this point, we're in a great spot to be a buyer because now I can risk small to earn large going back to that high, right? This is a much more desirable area to be a buyer. The problem is we still have that darn trend line to worry about. In this situation, you want to wait for the bears to come in and get short off that's the 21 moving average, right? 21 EMA. Get the bears coming in and get them to commit off that moving average. Once they do, all of their stops, right, are sitting right above that high now. Remember, it's a strong move up. They want to retest the high. So once we see that pop up, now here's where that trend line comes in. Again, that trend line is kind of it can be your best friend if you use it. What I want to do is I want to get those stops to get triggered. And what I'll do is I'll wait for that pullback and look for that signal coming off that trend line. Now you'll notice on this one, I don't need that trap. The trap isn't as important on this one. Why? Because we're not buying high. We're buying relatively low. And so we can expect to see a lot of buyers down here. But again, long-term bear market, trend line overhead. I want to get those bears trapped in, use their stops, but because that trend line, they love to come over and grab that bounce off that trend line to give you much better entry. And again, we're trying to go back up to retest the high, right? Does that make sense? So shallow pullback and then deeper pullback. Now, I know what you're thinking right now. What if we pull back, right? And how do I know when this turns into a reversal? Okay, when can I sell it going lower? Because for all I know, this is just a walk high, or they can drop this thing right back down to that big round number, right? You have to think it's an overall bear market right now. So here are 2 reversal patterns you want to think about here. And again, this can also be applied to the S&P. Let's say now we pull back into that range, pull back into that buy zone, and now the bears come in and they don't try and fail. Now they come in, they hold that pullback, and they jump, right? They blast off that moving average. Easy giveaway. This is a 1, 2, 3 reversal pattern, right? We call these 3-legged moves, 1, 2, 3 moves in our trade room. What I'm going to do here is I'm going to draw a trend line off that low. I'm going to find a channel off that high and repeat after me. First test is the best test. Now, what I always do is I always drill down and find some prior swings. Prior swings are where traps live. Failures are, or should I say, when we go above the moving average, that's where failures live. So hopefully we'll see a trap set up. The buyers will come in, try to buy off the 21. It's not a bull market anymore. Once we see that 1, 2, 3, it's now a bearish trend and a pretty clear reversal. Think about where their stops are now, and we can sell that failure into those stops, and then we can use that pullback for the pullback setup. Now here's a really, really easy trick. The size of that leg down will probably be about equal to the size of the follow-up leg. Okay, we call this first leg is third leg, right? So first leg down, second leg down, third leg down. We pretty much know where the market wants to go. It's going to want to take back out that range down around 11,000, but you can really kind of fine tune your exits by thinking, okay, first leg, third leg, right? That's going to give me a much better final target, really fine tune that exit. I love those 1, 2, 3 reversals and then traps, failures, pullbacks, all the same setups, all the same entry patterns I teach in the free classes on our website. Now, there's one more here I want you guys to be aware of. What if this thing is a V-top? You know, we see a lot of these in long-term bear trends, right? The market will slow walk up, and then for whatever reason, right, it just punches and goes right back down again. That could easily happen, right? It could easily happen. And again, I don't know what's going to happen tomorrow. All I know is where the most probable trades are going to be. So let's say now they drop this thing like a rock. We don't pull back to the moving average and jump. No, that would be too easy, right? We don't pull back to the moving average. Now we begin to grind and grind and grind, right? We call these pop and grind breakouts, pop and grind reversals. What you want to do when it kind of pops and grinds down like this, and you'll know it when you see it, it'll grind down, it'll barely pull back to it. What you want to do is draw a trend line right off those lows, bring it up around those highs, and then again, look left, find some prior swings, get above a prior swing because that's where traps live. Get above the moving average. That's where buyers will come in and we can use their stops. And then we can use, of course, that moving average for that pullback combination, right? Again, first leg, third leg, it's going to give you a really good way to fine tune that target. Trap, failure, pullback, all the same entry patterns that I teach in the free course on our website. Which reminds me, I've talked a lot about the setups, a lot about the free class so far. I know that most of you guys are crushing it right now with the free course strategy I teach on our website. But if you're one of the few people who haven't taken the free course yet to learn all the setups, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link to our free course. The strategy that I teach in that free class will help you get into so many more easy winners. It'll help you avoid some very simple losses. And most importantly, it'll give you a game plan, a roadmap to follow each day, which for me gives me a ton of confidence. So grab that link that popped up. If you're taking too many losses, grab that free course. It's perfect for someone trying to make the jump into full-time trading. If you want to quit that job, right, that course will give you the right tools, and it's free to get you going on our website. That way, the next time I say pop and grind, right, you won't simply start breaking out a dance move. You'll know it's a channel, and you'll know where to look for that short, right, up off the high there. Okay, I think at this point now, we've covered some pretty good ideas here on the pullback, how to buy it, and of course here, how to sell it if that pullback turns into a reversal. But now here's the big question now, right? Now, let's say we go back to that low, we pull back, we retest. Okay, can I sell off that high? I certainly can. Wait, can I buy the breakout? Oh yes, absolutely, because the buyers on the Nasdaq, the buyers would love to get up around that 11,600. That's their next big objective, going higher here. So what if we pull back and retest? Can we sell it off that high? Can we buy the breakout? What if we don't pull back? What if it keeps going higher here? Right? There's a lot of things that could happen we haven't talked about yet. Let's talk about those now on the S&P. Over on the E-mini S&P or the micro S&P or the SPY, right? Whatever you want to use here, it all pretty much works. There are three key insights here on the S&P. They are very similar. We talked about on the Nasdaq, right? An overall bear bias. The overall bear bias is kind of the only reason why you're looking for a short right now, because you have a very strong move higher, right? Very strong move higher there for the bulls. What does a strong move tell us? It tells us to look for support levels, buy a pullback, and get that retest. Once they get the retest, do we break higher? Do we collapse off that high, right? That's what that's what a strong move higher tells us. And again, we have that same trend line, right, coming down here overhead as they begin to stair step going lower. That trend line, it can be your best friend or it could be your worst enemy if you're not paying attention. So a lot of this is going to be pretty much the exact same thing on buying the pullback, and then if we turn that pullback into a reversal. Okay, the bears would love to get back down around that 3,600 on the S&P, right? And the buyers, of course, they've got not as much space overhead because the S&P made a big move higher today, but the buyers have more room to go here as well. The first thing I want to talk about right now is what if we get that pullback? We retest that high now. How do I sell this thing? Right? How do I sell it? Well, the key is that, well, think about this. I always tell my students, ask these two questions. How's my location and how is my momentum? Right? How is location and how is momentum? If I want to be a seller up here, this is a great spot to get short. Because why? I'm at resistance, and resistance is where you want to sell. But that's the only thing we have going for the short, right? Because momentum is not good, right? Great location, not a good momentum move. Why do I say that? Because again, we're bullish. I realize we're long-term bearish, but I'm a day trader, right? I assume you're a day trader or at least a relatively short-term trader if you're watching this right now. You can be a long-term trader if you want to. It's just difficult with futures because they have expiration and leverage. So you're more than welcome to be a long-term trader, but that's not how I trade, right? So bear bias overall is great, but if we pull back right now and retest the high, you could be stepping in front of a freight train trying to sell off that high right now. Okay, so how do we do it? We can definitely do it. The key is we have to trap in some of these buyers, right? You got to trap them right in. What you want to do is you want to think professionals are going to buy that low, right? Professionals, the smart money, they're going to buy that low. I love that area down there, 36.65 or so, 36.54, that zone right there, right? Two zones, shallow zone, deeper pullback, same spot. So they buy the pullback, the professionals come in, they buy the pullback, they retest the high. Now, what's my problem? We're so bullish, I need some sort of catalyst, right? Remember, it's all about getting that edge. I have a ton of an edge on a pullback because, again, I can risk small to earn large, right? I can take a small amount of risk for a big amount of reward on a deep pullback, okay? That's a huge edge. That makes that trade very, very desirable, right? And because of the self-fulfilling prophecy, it allows me to really leverage that, right? Up here, though, we don't have that same edge anymore. You can't risk small to earn large up there. So what we have to do is we have to use, you guessed it, we have to trap in some of these buyers and use their exits as the fuel. Use their stop losses as the catalyst. Okay? Now, what we'll do is we're going to use the 2-try rule here. As we go back to retest the high now the smart money comes in, right? They try once. They try twice. Remember, when you're counting the entries here for the buyers are going to want to buy low. Okay, so it's going to be 1 try for the buyers, lower low, 2 try for the buyers. As I always tell my students, buyers want to buy low. Sellers, they want to sell high. So as we get that strong run up, we retest it. That's where professionals, the smart money, taking their money out of the market, right? They're taking profit right there. The buyers come in, they try once, they try twice now. Think about now where the stops are, right? Think about where their exits are. Okay, think about where those buyers are hurting, where their pain is. Okay, think about that low right there. And what I do is I wait for that nice strong signal candle. You'll learn about signal candles in our video classes and look for that dump going back down. Now, when you get that dump going back down, your job isn't over yet because you oftentimes now will get a new channel coming in. The key is don't chase it. Draw a trend line off that low, find a channel off of that high, right? And then again, mentioned before, first test is the best test. I like to go out, and as this thing begins to kind of come down here, right, I'll go out, find that new channel off the low, or actually find a trend line off the low, find a channel off that high, and then again, look left, prior swings, right? What you want is you want that first test off the high of that channel, but more importantly, get above one of those prior swings. Prior swings are where traps live. Get above the 21 moving average. Get some buyers coming in. Horrible place to buy, right? Not a good spot for buyers to buy. Where's the best place to buy right now? It's underneath these lows at this point. Okay, we got one big range now. So as buyers come in, try to buy that pullback right here. Wrong spot, buyers, right? We're already retest that high, hit them right where it hurts, and use those stops. So again, it's a 2-try. I call these 2-try failures. It's a failure because we're basically selling the buyer failure. It's a 2-try failure because, again, we're so bullish in this scenario. And then, again, as it rolls over here now, we then look for that trap, that failure, that pullback combination. You'll see a lot of examples of those in that free trading course. Okay, that's a really, really good short. I like that short a lot. Now, the next question is we get the pullback, right? We blast up and run higher. How do we do that? How do we make money on that? That's a great question. On this one now, let's get rid of this area right here. In fact, let's get rid of all of it here, right? So we get the pullback, the buyers make their money, they go back to retest high, we keep going, right? We keep going. Okay, so here's the trick. As we get that pullback going higher, there are 3 different ways you can buy this thing as it breaks out. You ready? One of them is going to be a 1-2 blast, right? If we pop up above that moving average, we take out that high, we pull back to the EMA, and we jump off that moving average. That again is one of those 1, 2, 3 breakouts. 1, 2, 3 move. Remember, strong move. They're going to want that retest. Don't chase it. Mark that trend line. Find that channel. find those prior swings, and then again, get that pullback, right? Pullbacks below prior swings are where traps live, failures, pullback combos, and don't forget, first leg, third leg, right? Am I starting to make some sense here now? First leg, third leg, that'll give you an idea of how to fine tune that exit. That's a great one. That's a great one. Or we pull back, we go back up, we retest the high, but it just punches, right? It punches, it pops. And let's get rid of this channel here right now, just for simplicity purposes. We move lower, right? We now come over, we pop. We don't pull back and jump. We pop and we grind, right? We grind. Even easier, guys. Mark off that top. Find that big low. See how I do that? Right? I draw them backwards. I draw them off the top. I find down at that low. And again, look left. Find prior swings. You know buyers are going to eat that up, right? They're going to eat that up. If they can get a strong run higher, they want to go back and retest the high, okay? Don't make the mistake and make this big channel, okay? The big channels they're not in that situation, right? Not in a pop and grind. Okay, the pop and grind is not just my favorite dance move. It's also one of my favorite chart patterns every morning in my trade room. Again, trap, failure, pullback, and again, first leg, third leg. First leg, third leg. That'll give you an idea of where that exit is. And then another one you want to think about too is, let's say, for example, we get that pullback, the market blasts higher. This is more of an aggressive one. So if we see a real, get pullback in, the market just blasts, right? Blasts up, strong move, shallow pullback, higher high in price, traps, baby. These are one of my favorites. They're a little more aggressive, but again, if we get that deep pullback we want, and this thing just blows right through that high, right? This will usually be accompanied by some other headlines, right? Some news event, could be a JOLTS report comes out, right? JOLTS come out. Bad news is good news right now with the Fed tracking up interest rates. So we get a bad news report on the JOLTS report tomorrow, right? Everyone says, yay, bad news, no more rate hikes, and the market jumps, right? Jumps up, shallow pullback drives the buyers crazy. Higher high in price confirms it's not just a V top, which happens quite a bit in a long-term bear market, and that is your trap. Okay, that's a great one too. So be aware of that as we go higher. Now the next big question is what if we don't get any of this, right? What if the market keeps on going higher? If the market keeps on going higher, there probably won't be that trend line anymore. But if we keep going higher here right now, right? If we keep going higher, and the market keeps on kind of grinding up, right? And grinding up, I'll do the exact same thing. I'm going to keep finding those channels. I'm going to mark off that low. I'm going to wait for that deep pullback, try to get underneath some prior swings, to trap in some of these bears, right? Let them get short off the moving average. And I'm going to use their stops for that fuel to go back up. Remember, though, keep your eyes on those resistance trend lines as we come down, right? We know they want to go back and retest the high. So if we keep going higher, just stay patient, wait for that nice deep pullback, draw the channels off the highs, and you'll be ready to pull the trigger and make some money on that pullback for tomorrow. And again, I know I've covered a lot in these first few charts, so don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to do this all together in our trade room tomorrow morning. So definitely come out and join us. Now, over in the oil, those were easy, right? The S&P and the Nasdaq was pretty easy because they gave us such great, strong momentum there. Here's the lot more challenging situation here right now is on oil. Oil, don't forget, is very much news driven, and lately it's been loving that news about Hurricane Ian. My heart really goes out to anybody, by the way, who was really affected on the southwest coast there of Florida. Just some really horrible images coming out of Fort Myers and stuff. So I really hope everyone is helping each other and staying safe out there. Unfortunately, we got to keep on going here and trading oil because there's money to make here on the oil. There are really only two real key insights right now on the crude oil. One is a long-term bear bias. Look at a 4-hour chart, look at a daily chart, and you will see we are overall bearish right now. Now, you can definitely see we have a pretty obvious bullish move right now. We got that OPEC meeting coming on Wednesday, and they're flirting with the idea. Now, they do this all the time. OPEC knows the minute they say the word production cut, the price will go up. So OPEC's been playing, it's now OPEC plus, right? Whatever it is, whatever the acronym of the week is these days, right? But OPEC Plus, right, whatever it is, they may come on Wednesday and say, you know what, we didn't agree with any of this stuff. We're deciding we're going to keep the production the same. But right now they're floating out, right? They're floating out these potential production cuts right now, and so oil's still riding off the fumes, if you will, of Hurricane Ian last week, and now they're they're waiting for that OPEC report coming out on Wednesday morning, probably before we get to our desks at 8 o'clock on Wednesday. Overall bearish. Obviously a bull market, there's a range in here. And this trading range is really the biggest kind of problem we have on this chart right now, because ranges act like magnets. There really aren't any good trades right in this location right now. If you want to be, well, you can see for yourself, right? We talked about something like this over on the NASDAQ and the S&P, right? We had those big channels off the high, off that low. You can clearly see, right? Can you see that trend line coming down? Trend line coming down right there, right? So they pull it back, the bears once, the bears twice, right? And then up like this. This is kind of the same basic idea as we're looking for on the NASDAQ and the S&P. So where do the buyers want to go right now? They want to go back and retest the high. The problem we have right now is that trading range, because I do not want to buy right here. No, thank you, right? It's too easy for this to be a pendulum swing. The amount we go below the range, right, is the amount we go above the range. That top right there, combined with that top, is screaming trap. So I really don't like the buy right now. I don't like the buy right now. I think buyers would love to take out some of these lows and buy low, right? Buying at support, buying below the trading range. I also think buyers would love to get a breakout. There's a lot of open space up there before we start reaching that 86.68 level is kind of the next big objective there, I would imagine, for those buyers. So buyers want a breakout or they want a deeper pullback right now. The sellers have a lot of options here right now. Obviously, like we talked about on the S&P and the NASDAQ, if they can get that retest of that high, the bears would love to get those two try failures off the high. That is a very good setup at this point because you have that trading range, right? Ranges are overlapping price action, a lot of volume piling up right in that area. It's a magnet. So if I can get back to that level of resistance, I can use that for a short back down. Or who knows, right? We might take out that low, break down, and make a run back to that big round number at 80. 80 is a very, very attractive number right now because you can see that big gap, right? That big gap is just begging to get filled right now. So let's talk about these here because, again, there's a lot we can do here with this chart. We just have to be a little patient here as we go. First of all, to be a buyer right now, to be a buyer on this, you're going to want to get this thing either underneath this trading range. And on this point now, if you get this thing underneath that trading range, this will be a relatively deep pullback. It's going to feel very, very bearish if it pulls back into these buy zones where I'd like to think is the best entry here for tomorrow. What we want to do in that situation is try to use those sellers against themselves. Right? Because at that point, it will be very much a big two-legged move lower. It'll be a pretty deep pullback at this point. And with that gap down there, you're probably going to have a lot of bears here that might not normally want to short this thing, but they might do it anyways because of that gap to get filled. Anyways, long story short, trap in those bears with two tries. Once those bears try twice here, why two? Because again, they might try to fill that gap. It's a relatively deep pullback. It's going to feel a lot bearisher than it really is there. It will, right? Bearisher, by the way. That's a new word, by the way. 1 and 2, and then think about where those stops are. Trap in those bears, right? Those bearisher bears, and use those stops as fuel. Targets are easy. Take some off at this prior swing, leave a runner up at the retest of that high. So trapping in those bears as we take out that low, that's a really good one to be a buyer. And then as we go higher, right? Let's say here now we take out that high. Again, mission accomplished. Strong move for the buyers. They want to retest the high, but now they don't fade off that high now. Now they pull back to the moving average. Again, OPEC is still flirting with the idea of a production cut. Everybody's talking bullish, bullish, bullish. They pull back and they blast. Now, I'm not going to buy that first pullback. And I would not recommend any of my students to do it either, right? So they do take out that high here. Great. Now show me you can do this, right? Show me you want this. Show me you can blast off that moving average. If I can get that 1, 2, 3 breakout, remember the range is a magnet. If I can get that breakout now it's on. Now mark off that high. we find that channel, we drill down, and we find any of those entry patterns we talk about in the free class, right? So traps, failures, pullbacks. And again, that 86.68 level, probably going to be a pretty easy target there if we get that 1, 2, 3 breakout. I would also think it could take out that high and begin to grind, right? Grind. Look back here. That's all this was. Right? It's a gap up, but a gap is just a big green candle, right? Look at that. It's a pop and a grind. How do you do it? You draw a trend line off the high. You mark it off that low. This is not rocket science, right? You buy off that low. Okay, you can see that's exactly what the buyers did right there. Same thing here, right? They pop up, they grind. Easy. This is an easy one. Mark off that high, mark off that low. Again, find those traps below prior swings, find those failures below the moving average, right? Grab that pullback and back up to retest the high. Okay, that's an easy one. Or maybe something happens overnight. OPEC comes out and says, no, we're definitely raising production. We're not letting this thing go back to $25 a barrel, which could easily happen, by the way, if the Fed gets their way with their recession they're trying to engineer right now. Strong run, shallow pullback, higher high in price, right? This could easily be fueled here by further speculation of the OPEC production cut. What's happening right now is OPEC is deadly afraid. They're doing the same thing we saw when the pandemic first settled in, when the price overshot and really dipped. And they're smart to be worried about that because the price of gas is way too high. Demand is slowing down. They know that stuff. And they're definitely wise to be floating this idea here right now before things really get crazy after Hurricane Ian calms down. So strong move, shallow pullback. Remember, shallow pullback is the key to this because it drives everybody crazy, right? It doesn't let anybody get in. It's just too shallow, right? So now when the next time it pulls back, bam, everybody is waiting on that. That's a great trade as we go higher here. Now, how do we sell it, right? Well, we already talked about this pretty good already, right? We know the market wants to go retest the high. Once they get this thing back to retest the high, the smart money is already in long down here. That's why I said you really can't buy right here. It's not a good spot. Not with that trading range in the way. Okay, not with that range below us. So smart money now, they're taking their paycheck, right? They're cashing their chips out at that high. Now let's get some rookies coming in. Okay, the easiest money you're ever going to make in these markets is selling into stops of the unexpected buyers. So buyers come in, they don't know how to read a chart yet. They're buying too high. We do not buy high above a trading range. We wait for inexperienced buyers to make that mental mistake. We let them try twice because, again, we are short-term bullish right now, long-term bearish, but we're not looking bearish at this point yet. Once those buyers try twice, now we got their stops. Remember, it's a very desirable trade down here. I can take that without running stops very much. It's not very desirable up here. So therefore, the big money, the smart money, they're not going to be taking that trade. I need to leverage the self-fulfilling prophecy to get a good trade, right? It's the way the markets work. If I can't get any buyers to help me out up there, I have to get the bears, the sellers, if I can't get any buyers to help me out, I need to let those buyers trap me in here and sell this thing back down again, if that makes sense, right? Good trade down here, bad trade up here, trapping those buyers, right? Let those buyers try a couple times, use their stops, and look for that short back down. Where's my target? Back down to retest the low. Now, once they come back to retest the low, can we then come out now and buy into it? Absolutely. 1 try, 2 try, buy it back up again. So as the market rotates back and forth, right? As it rotates back and forth, we can trapping the bears, trapping the buyers, right? Remember, think about where the smart money wants to get in. And if you could trap in traders who are not the smart money, they're not going to be able to defend themselves and it'll easily collapse, in this case, back down into that trading range. Another one is pretty obvious, right? If they take out that low, if the bears do not come in and try twice for the long here, if they hold that pullback and blast going lower, we know where they want to go. They want to fill that gap. Right? They want to fill that gap down there. So watch that strong 1-2 blast going lower, and we can find that new channel, right? And grab it off the high of that channel, right? First leg, third leg, that'll be your objective. We pretty much know where the market wants to go. They want to go right back to that 79, 74. That's to fill that gap. Now, one thing I would be aware of on this area down here, okay? Remember, there will be a big difference between a straight move down Okay, let's say for example we open up and the market makes a real strong move down here. Remember, they have yet to hold that pullback. So at this point now, bears once, bears twice, get like a trap off that low and back up into that trading range. I wouldn't be surprised if we saw a strong shot lower, take out that low. Again, it's not going to be a full-blown reversal yet because they haven't held the pullback. Okay, trapping those bears now before, right, and buy back up into that trading range. However, if they do make that run down, if they pull back to the moving average, this is the big difference here, and they jump off that moving average, that is a reversal. There's a big difference between a straight line down and a straight line down that pulls and goes. Okay, if all we get is that strong shot lower, it's nothing more than potentially a head fake because that trading range overhead is still a magnet. Okay, at this point now, do those bears try twice here and give us that buy back up? Or do we get that strong move down? Do we hold that pullback? And do we jump? The jump off the moving average is the key to telling when this is a reversal. Then you can find that channel, drill down, and find that short off the top of that channel. A good example right here. It doesn't matter how strong that pullback is. If the bears don't hold it, we're going to go right back up again. Okay, so be aware of that. If they do just kind of want to come down, tap that area, and then snap back up again, remember, that range is a big deal. It's a big time magnet. All right, guys? All right, guys. We've got a lot here on this video so far. The oil's set, S&P's set, Nasdaq's all set. Now tomorrow, we'll trade this stuff together tomorrow morning in our trade room. The game plan is all set to go. Tomorrow, we trade our plan tomorrow, 8 o'clock Eastern time. In our trade room, we open up every morning. It's a great place to come out and learn and trade along. If you're missing too many good trades right now, if you're taking too many losses, if you're making too many mental mistakes, what are you waiting for? Come out and trade it with me tomorrow morning, every morning at the opening bell. I'll put all the links you guys need. I'll put all the free course links, the membership links. I'll put all that right in the description of the YouTube video. So definitely grab that and get registered. I would recommend start with a free class first. Get your bearings on that, get that going, and then to be ready to go here with me in the morning trade room at 8 o'clock Eastern time. Please don't be afraid to call the office. I know we cover a lot on these newsletter videos, but I'd love to slow things down. Make sure you have all your questions answered. Get the right charts, the right broker, get everything you need set up so you're ready to kick some butt with me tomorrow morning as a student in our trade room. Don't be afraid to use that live chat. Call if you have questions. And as always, you can drop comments in the comment section below. I don't get those questions answered as soon as I would like to in the comment section. The easiest way to get help is to use that live chat or simply call the office or shoot us an email, and we can definitely help faster at that point. All right, guys, I'm going to wrap things up for now. Great job tonight. Had a great morning this morning. We got one more coming tomorrow morning. Jolt report at 10 o'clock Eastern time. I'll see you guys tomorrow, 8 o'clock Eastern time. If not, we'll see you guys same time, same place tomorrow night, and we'll get ready for Wednesday. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.